It was a number home buyers, the markets and certainly the government were all sweating on, no doubt the Reserve Bank too. In the end, the latest quarterly inflation figure came in roughly where everyone was expecting it to. The headline rate ticked up from 3.6 to 3.8%. The underlying rate edged down from 4 to 3.9%. It could have been worse, a lot worse. And it means the government's hopes of a possible rate cut before the election are still alive. But I am keen to dig into the numbers a little and explore what's driving inflation now and why tackling this last mile is proving so difficult. I'm David Speers and I'm actually on Larrakia country in Darwin right now, heading to the Garma Festival this weekend in the Northern Territory. Welcome to Insiders on Background. Well, Aruna Sathanapally is the CEO of the Grattan Institute. Thanks so much for joining me this afternoon.
My pleasure, David.
So, Aruna, what do you make of the numbers? What should we be looking at, and are they good or bad figures?
Look, these numbers are actually somewhat unremarkable. They're largely consistent with what people were expecting to see. There was some commentary in the lead up to today that sort of raised alarm around the need for a rate hike, and really there's nothing to see here in terms of these numbers indicating that a rate hike is anything other than highly unlikely.
Right.
They're consistent with what the RBA has been forecasting. I think the RBA has been signalling for some time that this last stretch is just going to take a little bit longer than we'd hoped for in terms of getting inflation back to the band. But I think that one of the things to remember is that for interest rates they work slowly. There's a significant lag, and so really these are the sorts of numbers that the RBA will be looking at, but they'll also be looking at what they think is happening over the next year, 18 months.
So just to pick up on something you said there that I know a lot of home buyers will be attuned to, you think another interest rate rise is highly unlikely, looking at these figures? Yeah,
looking at these figures alone, we're not seeing anything in them that would give us reason to worry about that. But, obviously none of us have a crystal ball. So when the RBA meets next week, it'll go through its usual process of consideration. But as I said, this is consistent with their forecasts. So.
Well, that's a relief. Now, explain this to me. You've got headline inflation ticking up. You've got underlying inflation ticking down. What's the difference, and why is there one going in one direction and the other in a different direction?
Yeah, it's a really good question. So, look, there's all sorts of ways in which prices change over the course of the year for different categories of goods. So, for example, if you're thinking about school fees, they'll go up usually at the start of the year when people have to pay their school fees. Private health insurance premiums go up in April when funds are able to increase their rates. So there's a bit of noise in our inflation numbers that reflect some volatility in particular categories. The underlying inflation measure uses a kind of a formula I don't need to get into, but basically looks to strip out some of that volatility. So you're getting a better sense of what's really going on.
And that's the one the Reserve Bank pays more attention to?
Yeah, absolutely, because you're not necessarily going to change your policy settings based on a seasonal figure without properly understanding that in the broader context.
So that underlying number is, I guess the good news here, it's come down, not a lot, but it's come down from 4 to 3.9%. Why has that number come off a little?
Well, really across a number of categories, we're slowly seeing inflation come down. So really what that reflects is, we saw a really steep drop over the course of 2023 from the high that inflation hit at the end of 2022. And then we're seeing this kind of gradual drop down, and the underlying figure reflects that in aggregate. And we're not really seeing, particular categories buck that trend, but we are seeing a little bit of bumpiness, in particular sub-items. But broadly, what it suggests is a picture where what the RBA consciously was doing in Australia, it didn't raise rates as high as some other countries, but the deliberate strategy was to try and avoid really steep rate hikes, knowing that perhaps it would take a little bit longer to bring inflation down, but really trying to preserve as many of the gains that we've seen in terms of bringing down unemployment.
Well, this is the narrow path that Philip Lowe, the former Reserve Bank, used to talk about, and obviously the current Reserve Bank governor as well. At times, it's looked a bit more like a goat track than a narrow path. But are you saying, this is about trying to bring inflation down, but avoid big job losses and even a recession? Are you saying we're still on that path, and the path is maybe even looking a little stronger, a little wider?
Yeah, I mean, look, I think we're still on that path, and I think we can see that in the labour market figures, because inflation's come down quite a bit, and the labour market's still really healthy. Predicting, what the path looks like from here is probably, a task that's above, all of our pay grades. It's hard to see kind of clearly what kind of disruptions might take us off that path, because they're the sorts of things we can't predict. But it was always going to be challenging to calibrate interest rates in a way that, put just enough pain on the economy to bring down inflation, because of that really lagged effect that interest rates have, but also because they're a really blunt instrument.
I mean, look, they are, and they don't. I mean, they are blunt, but they don't hit everybody in the same way, do they? Are we seeing in the spending patterns across the economy that some people actually aren't feeling too much of an impact here?
Yeah, absolutely. I think that's one of the things that's really interesting this time around is that there's spending's held up in certain portions of the population. And in particular, there's recent data that the Commonwealth Bank put out that did an age breakdown in terms of spending that they're seeing in their customers. And what it showed was that for younger cohorts, people were pulling back their spending quite dramatically. But for older cohorts, it was growing, and in some cases growing beyond the pace of inflation quite a bit, which indicates this really differential position. And age is not really the reason, right? What age is a bit of a proxy for is a situation where someone might own their own home and therefore be shielded from one of the really big drivers of inflation.
So if you paid off your mortgage, you're going to be increasing your spending. Is that generally it?
Well, if your house price was kind of coming down, there is a wealth effect that tends to happen where even if you own your house, if you see house prices coming down, you tend to adjust your behaviour. But here we haven't seen that happen. So because house price growth has continued, we haven't seen some of the effects that you might expect when interest rates go up. And so what we're seeing is for people who aren't directly affected by mortgage payments or increasing rents, then that they might actually be doing quite well insofar as having built up savings during COVID, and maybe earning a decent return on a share portfolio or on their assets.
Now, speaking of housing, what do these latest figures tell us about the cost of housing, the cost of rent, and what's really pushing that higher?
Yeah, so that housing is probably the single biggest driver right now in these inflation numbers. It constitutes quite a large share of the CPI basket, and at the moment what we're seeing is a yearly inflation rate of about 7.3%. I should note that would have been even higher if it hadn't been for some of the increases to Commonwealth rent assistance that the government introduced last year. So rent rises are a huge component of what's going on, and what's driving that. Some part of what's driving that is just tightness in the rental market. Not enough stock to go around. Some part of what's driving that is that we want more space than we did before. So people want bigger houses, they want extra rooms, and they're willing to pay for it, and that's boosting demand. And another part of what's driving that is that we had a period where we closed our borders, and there was a catch up in our population. That's largely kind of worked its way through now, but that catch up in population has also meant that demand for rentals has been really healthy, but we haven't really grown the stock of houses, and we've got some real problems in the supply forecasts in terms of our ability to do so in the near term.
I mean, given that problem is still very much there, will be there up until the election, what's the Grattan Institute's view of what more can and should be done to tackle these housing pressures?
Yeah, I mean, it's probably useful to split them up into the things that we can do right now versus the things that will take a little bit of time. And unfortunately, it is a bit of a wicked problem. It's hard to solve an imbalance in your housing market quite quickly. Like in the sort of immediate term, the issue seems to be construction. There's some interesting figures around how many dwelling approvals or construction approvals are nonetheless not progressing, and that seems to be an issue of capacity in the construction sector. So one of the things that governments could think about is what's their infrastructure pipeline? To what extent are they contributing to the problems of capacity? For instance, big transport projects, can they be slowed down?
Well, that's interesting. Hit the brakes on some of those big transport, road projects and so on, to free up more workers and supply for housing.
Yeah, and look, and this is just because there's just so many things that the Australian economy can do all at the same time. We do obviously have, significant infrastructure pipelines at state and federal levels, and for a long time, borrowing costs were low, and you can understand why governments announced a whole lot of projects. But when borrowing costs have risen, and then we have capacity constraints in the system, then we do need to think about prioritising. And this is why, so many people will talk about density and the importance of density. One of the things that we can do is to build housing where we already have infrastructure and reduce the need to build out infrastructure in order to grow housing in areas that currently don't have roads and train stations and hospitals and so forth.
Yeah, it'd be an interesting political trade-off to contemplate here that any government, state or federal, would cop it for slowing down on the big infrastructure projects. But if it can be sold as making the delivery of more housing achievable, maybe there's an upside there.
Yeah, look, absolutely. And I think that, what we would say at Grattan is that some of those transport projects don't necessarily stack up. So it might not be the worst thing all around to have a good, cold, hard look at them and see whether that is the best use of public funds here and now.
Maybe something for the new Minister, Claire O'Neill, the new Housing Minister, to contemplate and take up in Cabinet or with her state colleagues. Look, just getting back to inflation, though, there's been a lot of debate this year too about homegrown inflation, and I suppose by this we typically talk about services inflation. What's happening on that front?
Yeah, look, it's still higher than banned. We're not necessarily seeing anything here that rings huge alarm bells or is sort of out of the realm of what was forecast. It's certainly the thing to keep an eye on in terms of the way in which, I guess, the way that economists would talk about it is those inflationary expectations are becoming a bit unstuck, and we're starting to see the sorts of, the wage growth picking up in a way that isn't consistent with returning inflation to band. I don't think that we're seeing anything right now that would indicate that. But certainly that is something that everyone will be keeping a close eye on, and is really part of why I think that the RBA will be really careful about when it starts cutting rates, because one of the things that it's really important the RBA does is maintain that credibility that it will bring inflation down, that everyone should expect that the RBA will do whatever it needs to bring inflation down.
But we shouldn't necessarily hold our breath for a rate cut this year. Is that your view?
No, I think that at the moment it's probably anyone's guess as to when that might come. There's a few there's a few other pieces of data to come out over the sort of the coming quarters before I think we could be really confident about making a call there. Yeah,
no, fair enough. Just finally here, many people have been pretty angered about the Reserve Bank's interest rate hikes. I'm not sure if you're willing to give them a bouquet or not here, but it does sound like you're suggesting, or coming close to suggesting, they might have got it right when it comes to their interest rate settings here. It's the only tool they have at their disposal, given that we're still on this narrow path. Is that fair to say? Is that what you're saying?
Look, I think if the RBA managed to bring down inflation from where it was to where it needs to be without creating unnecessary pain in terms of job losses, and this is real stuff, right? This affects people's house. If you're a renter and you see rents rising and you lose your job, that is a really tough position to be in. If they can manage to bring this about without creating that pain unnecessarily, I think that would be a tremendous feat, and I'm certainly hopeful that they're on the right path.
And does the government get much credit, do you think, for where we're at the moment, or does it need to be really doing a lot more than it has been?
Look, governments are in a tough position, right? Because on the one hand, there is that pressure on them to provide relief, cost of living relief. And I think one of the things that, came out really clearly with Australia's experience with the pandemic is that, we in Australia do expect our government to step in when people are doing it really tough. That's kind of a really broad-based sentiment in Australia. And there is a role for governments, given that interest rates are so blunt, to make sure that the people who are bearing it, who are bearing the load, who can't necessarily bear it, are shielded. And that's something that fiscal policy can do. So tax and payments can do that in a way that interest rates can't. On the flip side, there is a lot of spending in the system once you add up the Commonwealth and all of the states. And I think that's also part of the issue here, is that we have, two levels of government and two levels of government spending.
And too much spending.
Yeah.
All right. Well, Aruna Sathanapally from the Grattan Institute, thanks so much for making sense of these numbers and giving us a better understanding of where we're at in what is the number one issue, the number one pressure point for so many families and indeed governments here and around the world. Thanks so much for joining us.
My pleasure.
All right, and you've got any thoughts or comments on this conversation or ideas for future podcast conversations we could have, please send us an email, insiders@abc.net.au. We'll look forward to seeing you Sunday morning. We'll be live from the Garma Festival in East Arnhem Land, so I hope you can join us then for Insiders. Bye for now.